Is your financial advisor unknowingly limiting your portfolio? Not because they're doing something wrong, but because they're only showing you a very narrow set of options. Here's the thing. Different advisors may take varying approaches to risk, influenced by their investment philosophy and the structures in which they operate. Hi, I'm Matthew Fitzgerald, certified financial planner and lead advisor with Holistic Planning, located here in beautiful Sedona, Arizona. And today I want to talk about a part of investing that most advisors won't even touch, and why that can matter depending on your situation. Let's get into it. Most large firms and traditional advisors operate within a very specific box: public markets, liquid investments, and highly regulated, standardized options, which may be a cookie-cutter, one-size-fits-all approach. And again, there's nothing inherently wrong with that, but there's a reason they stay in that box. A lot of it comes down to risk, not market risk, but firm-level risk. Large firms are structured to avoid anything that could avoid liability, so they tend to avoid illiquid investments, private market opportunities, anything that isn't easily priced or quickly sold, especially private market opportunities where clients may be able to invest in a stock before it goes public, because from their perspective, it's safer, not always tailored to the client's individual objectives, and in some cases, shaped by firm-level considerations. The trade-off is that clients may never even hear about certain types of opportunities: private investments, early-stage companies, pre-IPO exposure, tax-efficient investment strategies that may not be available to the general public. These are areas where historically a lot of growth has happened. Companies are staying private for longer, meaning they're not going public. In fact, approximately 86% of all U.S. companies doing more than $100 million in revenue are privately owned. And if your entire portfolio is limited to public options, you may be missing part of the broader investment landscape. But that doesn't mean these opportunities are right for everyone, but it does mean they're not even a part of the conversation. At our firm, we take a different approach. We're not trying to stay within a predefined box. We're trying to understand what's actually appropriate for each client, and then explore all available options within that context. That can include looking at private markets or less traditional investments when it makes sense. There's even more conservative investment options that provide protection from market volatility that the large firms won't touch. Part of the advantage of working with an independent firm is that we're not operating under the same constraints as a large institution. We're able to think longer term, not just what's easiest to implement today, but what might make sense over the next 10, 20, or 30 years. As fiduciaries, our responsibility is to evaluate all investment opportunities based on how they align with your individual circumstances and goals. Now, this is important. This type of approach is not for everyone. Private investments can be illiquid. They can carry additional risk, and they require a long-term mindset. But most clients' goals are long-term. Often when I hear somebody say, "I'm not going to be around for that long," I ask, "Are you going to be alive in 5 years?" If so, that's kind of the target that we're looking at. Typically, the people we work with are not trying to manage everything themselves. They're successful, they're busy, and they value having someone help them make more complex decisions. They're delegators. They know that they don't know everything, and that's okay. That's what we're here for. They want to understand the strategy, but they also want guidance to opportunities they may not have access to on their own. The goal here is not to chase risk, and it's not to replace a well-structured public portfolio. It's to make sure you're not unintentionally limited by a system that was designed to protect the firm, not expand your options, because those are two very different objectives. If you're in a position where you're starting to think more seriously about long-term growth, diversification, and what opportunities you may or may not be seeing, that's usually a good time to have a conversation. You can schedule a complimentary consultation, and we'll walk you through your situation and help you determine what's appropriate for you. At the end of the day, it's not about taking more risk. It's about making sure you're not missing the right opportunities. If you have $1 million or more outside of your primary residence, you may have access to these investment opportunities, so you can worry less and live more. You can read more on my website or schedule a complimentary consultation with the link below.